Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. Today we are going to cover Omnicom Group. It is July 19th. Let's jump right in the video. If you want to know more about this company, check them out, www.omnicomgroup.com. That's www.omnicomgroup.com. That is their homepage where I pulled this information from. Omnicom is an interconnected global network of leading marketing communications companies. Our portfolio provides the best talent, creativity, technology, and innovation to some of the world's most iconic and successful brands. We offer a diverse, comprehensive range of marketing solutions spanning brand advertising, customer relationship management, CRM, media planning and buying services, public relations, and numerous specialty communication services to drive bottom line results for our clients. 5,000 plus clients in over 70 countries, so they do have their hands in a lot of communications and marketing around the globe. And again, a lot of their, I should have put some of the companies that they represent up, but you can check that out on their homepage if you are interested. Let's jump in and take a look at the fun stuff. So we are talking about Omnicom Group, ticker OMC, out of the communications sector, down 10.36% today. Huge drop on the day. Anytime I see that company that pays dividends, we're going to see if there's some value there. So big drop. They closed out the day at $87.78. 52-week range as low as $61.85, as high as $99.23. So even though they had a 10% drop on the day, they are still closer to their 52-week high than their 52-week low. Average volume 1.5 billion. Today's was 8.1. So I mean, there was definitely a sell-off, even though it shows it pretty flat over the day, but definitely a sell-off. Again, you're down 10%, so there had to be a sell-off. Market cap of 17.513 billion, a beta of 0.88. So even though it has a big drop here, it is less volatile than the overall market. Price to earnings ratio is not terrible, though I would compare this to some of their competitors. I mean, a 13 price to earnings ratio, $13.22, is that high for a marketing company? I'm not sure. I would have to, again, compare them to some of their competitors. Earnings per share, EPS is $6.64. That actually is a pretty nice number there. Next earnings date coming up, October 16th through October 20th. Look for it somewhere in there that week. And for dividend, $2.80. They are a quarterly payer. We'll see that here in a minute. Nice dividend yield of 2.91. Obviously, if they continue to pull back towards this 52-week low, that would only go up, and we'll see if that's growing here in a minute also. Ex-dividend date was June 8th, so we've just passed that one. Looks like they're going to pay out they just paid out July 7th. So actually, if you were to buy them now, since that last payout there from June has already paid on July 7th, you would be in line for their next dividend. And a one-year target estimate, at least according to Yahoo Finance. I am not affiliated, just one of the sources I like to go to for information. They have a $100.49 target for the stock price, so it does speak to some upside appreciation in the stock price, at least according to Yahoo Finance. Now, if you were to go under statistics, one of the things I like to look at is dividend yield theory. So we'll jump over to statistics, down to dividends and splits, and we will look at their 5-year average 3.69, compare it to their current 2.91, or where over here they call it their forward 2.91, same number. And it is currently lower, quite a bit lower than their 5-year average. So that speaks to overvaluation on this one. If this number was higher than their 5-year average, it would speak to undervaluation. The two numbers are inversely correlated. So according to dividend yield theory, this is potentially overvalued and significantly overvalued, really. I don't know what the math is on that, 15, 16, maybe closer to 20%. I'd have to do the math, but overvalued nonetheless. They do have a low payout ratio, 42.17%, but again, let's see if they're growing. We'll see that here in a little bit. And we also like to go into the financials. You're going to find a lot of information there. You're going to find their balance sheet. You're going to find their income statement, their revenue, their debt to equity ratios. You can find all that information. How much debt are they paying down debt? Are they buying back shares? All that information is under financials, but one of the things we like to look at is free cash flow. We want growing free cash flow over time, because we want growing dividends over time, and dividends are paid out of the free cash flow. So if we were to go into financials, click on free cash flow, we can see 2019 they were at 1.7 billion, drop in 2020 1.6 billion, another drop in 2021 to 1.2 billion, and another drop in 2022 to 848 million. So overall, steady decline from 2019. I'd have to wait and see what they report out in October for this year, but at least through 2019 to 2022, steady decline. And that makes sense, right? 2019 and probably the first part of 2020 was pretty comparable. What I'm assuming what average would be for them, right? People were still advertising before the COVID-19 stuff there. So this is probably closer to normal for them. But then as we ran into COVID-19 and potential recession fears and people not working as much, you can see companies pull back on marketing. That is an area that I know my company does, and any company I've worked for, that is an area that's easy for them to save money if they don't pay for advertising as much. So you can kind of see that decline. And if we go into recession, I would expect that to continue for marketing companies to lose a little bit of free cash flow and lose a little bit of revenue because companies pull back on advertising. That's just what they do. Now they are repurchasing their own stock. You can see that pretty aggressively actually as well. Every year, 2019, 610, 2020, 217, 2021, 527, 2022, 611 million. So they are aggressively buying back their own shares. So that is nice to see. That's a little bit of a bonus. But so far, I believe it's a little overvalued based on dividend yield theory. Let's keep on looking at this one here. And another source that I like, I always recommend more than one. These are just two sources I like. You pick any two sources or three sources you like and just make sure the information you are getting is accurate. It's a way to back check whenever you compare one source to another. And the reason I like stock analysis, they present it in a nice, easy format here with 5 stock analysts taking a look at this one. They call it a consensus hold. I would have to agree, if not even a sell on this one after we look at the rest of the numbers for me anyway. But definitely not one I would be looking to buy unless it pulled back significantly, and maybe not even then. But they have a low estimate of $96, which it currently sits lower than their lowest estimates, which would be a 9.36% increase in the stock price. They have an average estimate of $102.60. That would be a 16.88% increase in the stock price. And if it happened to hit their high of $109, that would be a 24.17% increase in the stock price. All the while, you'd be collecting that nearly 3% dividend yield. Now, this is going to give you a lot of the same information that you saw at Yahoo Finance, actually exactly the same information, just in a different format. You can go under financials, find their income statement, their revenue, their debt, balance sheet, all that information, free cash flow. Statistics is what we're going to look at over here. There's a lot of information there. Their forecasted revenue growth, their forecasted or their margins, all that information we found under there. But what I like to look at under there is return on equity and return on invested capital, which we'll find over here under financial efficiency. Return on equity, ROE, I like 10% or better. This one is sitting at 7.3, so not terribly lower than what we like to see at 10%, but still does not meet that criteria. And return on invested capital, another one I like 10% or better, and that's pretty low at 2.5 or 2.45%. So, overvalued, not meeting the criteria on financial efficiency for return on equity and return on invested capital. Is their dividend growing? And the answer is no. Again, low payout ratio, 42.11%. No dividend growth as of, looks like 2020, they were in the December 18th, 2020, they were in the 65-cent range. Raised it up March of 2021 to 70 cents, but then it has been at 70 cents for the last couple of years. So no growth since 2020. So this would be a no for me, and with a low payout ratio like this, they must be expecting a prolonged contraction in free cash flow and revenue. Otherwise, in my opinion, they'd be increasing the dividend because a 42% payout ratio is pretty low. So low payout ratio, overvalued slightly, no growth in their dividend, probably would not be a buy for me again unless it pulled back significantly back to its 52-week low or even set a new 52-week low. But might be worth throwing if you're looking for a company in this space, might be worth throwing on the watch list or looking at some of their competitors to see if there's a better option there. I really am not looking for anything in this space, but when I saw a 10% decrease in price, we like to see if we can find value. I just don't see it here. Let me know what you think down in the comments section below. This is the vested interest stock screener. This is how I look at a business. This is how I set up the videos as well. If you want to pause this and go through my criteria, must meet 4 of 7 if it's not a financial company. If it's a financial company, it must meet 5 of 8. That's how I look at it, to either add it to the portfolio or continuing to add it to increase my position if it's already in my portfolio. That is really it on this one. That is Omnicom. Let me know what you think down in the comment section below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. We are building a community of like-minded dividend growth investors so we can share our experiences, share stocks like this, what we're adding to our portfolios, what we're trying to avoid, why we're avoiding things, mistakes we've made, tips and tricks we've found along the way that help us to be better investors. You can't necessarily benefit from my investing, but you can definitely learn from my mistakes and maybe take some things away. My dad used to always say, take what you can use and leave the rest. And I'm perfectly fine if you do that. Whatever you can take from this channel that makes you a better investor, all the more power to you. And whatever you don't like, just go ahead and leave it here, and no problem there as well. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have some stocks like this you want me to cover in the Stock Pick of the Day series, go ahead and drop them down below. Or any of your comments, if you have things you don't like about the videos, go ahead and drop that down below as well, and I will take it with a big old grain of salt. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice counsel of a certified financial advisor.